Okay, just quickly, a bit of revision regarding cash flows. Okay, if you're going to do a cash flow, what's the first thing you're going to do? Sorry?
Operating.
Okay, so you're going to draw up the operating. So you're going to do a heading, leave lines. Yeah? Heading, leave lines, heading, leave lines. Yep. And I've probably put a net cash inflow outflow for the year. And then cash beginning, cash at the end. Okay. What else do you think you can fill in without having to even looked at the question? Sorry? Okay, I'm just talking about the actual cash flow statement. Is there anything else that you can put in there that's pretty standard? Okay, so
Proceeds from sales.
Receipts from customers. So receipts from customers. Okay, from shares, yeah, you can put in proceeds from share issue. Where would that go? The only thing is you don't know if you're going to have one or not. But if you want to do that, go proceeds from share issue. What else are you going to get under here?
Repayment of loan.
Repayment of loan.
Borrowings.
Okay, increase in borrowing or proceeds from borrowing. Okay, you can also get under there dividends paid. But you're not necessarily going to have all these items. So in other words, you're not necessarily in your company, you're not necessarily going to have a share issue this year. You're not necessarily going to repay a loan. So you can put those in, but obviously cost them out if you don't have any of those. Receipts from customers, generally that's always there if you the company. If you don't have this, then obviously you're in a bit of trouble or two. Okay. Also, payments to who?
Suppliers.
To suppliers.
And laborers.
Sorry?
Laborers.
Employees, yeah. Okay, this figure here, as you can see in that question that we did, question 15, you generally find that there are quite a few calculations that you have to make here. So you can actually split that up and you can say, okay, payments to suppliers and employees. So for example, you would have payments for trading stock. You could have payments for wages. You could have payments for what else do you think? Rental. Okay, so basically for payments to suppliers and employees, you are obviously including all the payments that you are incurring as a result of running your business. Okay, the only payments that you're not including there would be what? Okay, things like interest paid must go in separately. So interest paid must be shown separately. Okay. Taxation paid must be shown separately. Right. Okay. So what I'm saying that this figure here obviously is made up of quite a number of calculations. So what did you pay for trading stock? What did you pay for wages? What did you pay for rent, for example?
Why we should start with interest paid?
Okay, just because interest paid is a figure that the shareholders want to know, they generally, it's a figure which is of interest to them, so they want to see it separately on the face of the cash flow statement.
Is that interest we pay from borrowed from on a loan?
Yeah, that's right. Yes. Okay. Obviously, in order to operate, you generally have to have some loans. So that would be your interest on the loans. Okay, so receipts from customers. In order to work that out, what generally do we do? We generally draw up our allowance account and accounts receivable. Okay. We generally end up with a figure which is a balancing figure, which is cash received from customers. Okay? Okay. So these figures here, to work out trading stock, you generally draw up your inventory and your accounts payable. And you generally end up with a figure here, which is cash paid to suppliers. Okay? For these other figures, you've got to use a bit of initiative. Generally, for example, wages, how do you think you generally calculate wages? Okay, take your wages expense, right, from your income statement. Okay? And then what do you do?
Check if there's any wages.
Okay, quite right. So you look at the balance sheet and you say, is there anything to do with wages in the balance sheet? So wages payable, for example. So you have wages payable. Sometimes in the balance sheet, what you're going to do is you're going to take your wages expense, opening balance wages payable, add that, closing balance wages payable, to get your actual wages paid. Okay. So I'm going through this quite quickly, obviously, because I'm just revising. As I say, a bit of time, well, every hour that we spend in class, you're supposed to spend an hour outside the class. Okay, so obviously you can't cover everything completely in class, so you're going to be spending a bit of time just revising this. If you had wages prepaid, for example, what are you going to do there? Opening balance, wages prepaid, you're actually going to take that off, because that was paid last year. If you've got wages prepaid, obviously closing balance, that means you paid this year for next year. So it's been paid this year, so you've got to add it. Okay. Okay, so this figure here is your wages paid this year. And you can really do that with any expense. You can see it's a puzzle, can't you? It's a bit of a puzzle. You've got to understand what we mean by prepayments, and you've got to understand what we mean by payables from Accounting 1. Okay. Proceeds from share issue. Where do you think you generally find something about that? Balance sheet. Has there been an increase in the shares? So for example, if the opening balance for shares was 500,000 and your closing balance is 700,000, what would you assume? Sorry? It's been an increase? Okay, you'd assume there's been an increase and you've obviously issued shares. But always look at the additional information. Look at the additional information to see what's said under that, because sometimes they can increase your shares, but they don't receive cash. Okay, why don't they receive cash? Okay, instead of paying a dividend, they'll actually have what we call a bonus issue. And a bonus issue is where shareholders get shares, but they don't pay for them. That's a bonus issue.
Yes.
Okay. Okay, payment of loan, repayment of loan. Where do you think you get information about this? Once again, balance sheet. Okay, balance sheet, and you'd look there and you'd say, okay, what's the loan opening balance, what's the loan closing balance? If it's reduced, you've probably paid it. Nothing under additional information. You assume that you paid an amount, repaid an amount. Okay. Obviously the same goes with So you're looking at opening and closing balances in your balance sheet for these items. And you are also looking at additional information just to see if there's anything else that they're telling you. Okay. This figure here, how do you calculate this figure? It's obviously going to be that plus that plus that. The total from operating activities, total from investing, total from financing. Okay, it gives you that figure there. So if this was 50 and this is minus 100 and this is 20, we're going to get 50 plus 20 is minus 30. Okay, easy. Okay, generally you're not going to get this figure right, and why do I say that? I mean, unless you've got this 100% and this all 100% correct, this figure is probably not going to be right. Okay, so we don't worry too much with that one. Cash at the beginning of the year, that one there, where do you get that from?
Balance sheet.
Balance sheet. So opening balance for cash. Okay, look to see if you've got any bank overdrafts and subtract that. And then obviously this is your closing balance for cash. Okay. We're talking about cash and cash equivalents, but if there are any that they treat as a cash equivalent, you'll have to get some information about that in the question. Okay. So cash flows from operating activities, financing, we've looked at, I generally find that this is probably the easiest part of the cash flow. But once again, it's not obviously your own personal choice in terms of what you find easiest. That's generally what I find the easiest. Then probably going up to here, interest paid can quite often be quite an easy figure to calculate. Tax paid, these figures are calculated the same as your, because they are an expense, so they're generally calculated the same as your wages expense. In other words, what you're doing is taking the income statement figure and adjusting it for anything in the balance sheet. Okay? So in other words, you know, if you've got interest expense of 50, and then you've got interest payable opening balance, you're going to add that and you're going to subtract your interest payable closing balance from your balance sheet. Okay. Cash flows from investing activities. What comes into this? Okay, financing is obviously also how do we finance the business. So how do we finance the business? We finance the business by issuing shares, obtaining loans. Okay, so that's what's going to be under here. Okay, and I'm just doing the fairly basic parts of the cash flow. Here we're going to get anything to do with sale of fixed asset or purchase. Okay, so non-current assets. So we're going to have things like, are we ever going to have gain or loss on sale in here? No, why not?
You want to see
Okay, what are we interested in? We're interested in
the cash which is coming or going out.
So if we buy something, we're interested in how much did we pay for it. Okay. If we sell something, how much did we get in? How much cash did we get in? Okay. If you haven't done any work at home, you will be lost. Okay. You need to be doing work at home. As I've said a number of times, you know, people kind of come to the lectures and sometimes might miss a tutorial, be late for a tutorial or something, but they're not doing any work at home and they expect to know what's going on. Okay? You need to be doing some work at home. Okay, so just make sure that that is done, otherwise you're going to be lost. Okay, so proceeds from sale of assets. Okay, that'll come here. Obviously, if you've got different types of assets, you can break it up. So proceeds from sale of land, for example. So for example, if you sold a piece of land, and you might have proceeds from sale of land, purchase of plant. Sorry? Equipment, okay, equipment, yeah. Equipment. Okay. This here is probably the area where you need to be using a fair bit of initiative, logic, thinking. You need to be understanding what you're doing. Generally looking at the balance sheet and saying, for example, if you've got land last year of 300 and this year it is 200, okay, you need to then say, okay, well, there's obviously been a decrease in the land, so more than likely something's been sold. Look at additional information. Do they tell me anything about how much they received from the sale of land? And generally it's a bit of a puzzle, okay, to work these out. You're generally looking at, for example, your land, you're looking at opening balance, closing balance. There'll be no depreciation there. If they say, for example, our opening balance is 500, closing balance is 600, we've sold land with a cost of 400, so we sold land with a cost of 400. In that case, what are you going to assume? So you've got to be making assumptions here. Okay, they've only told you in additional information that they've sold land, which had a cost of 400. So you do your little thing where you go, okay, that side adds up to 1,000.
So the G is 500.
So what have you done?
The G is
You've obviously purchased land with a value of 500. Okay, so what I'm saying here is that if you're someone who has to be taught every step of the way, you won't be able to do this very easily because everyone is different in terms of what you're actually doing here. Okay, so just bear in mind that this is pretty straightforward, that's straightforward, that's straightforward, this is straightforward, that's straightforward. This is virtually always the same kind of calculation. Here, virtually the same calculation. This is where, okay, you've got to be using a bit of initiative. You've got to be using some kind of initiative somewhere, and that's where you're going to be using it. Okay. Any questions there? So in that case, you'd actually have, okay, we've obviously purchased land for 500, proceeds from sale of land. They might have said, okay, in the additional information, we sold land which cost us 400, and we sold it for, they might have said, okay, we sold land which cost 400, and there was a gain on sale of 300. So therefore, proceeds from sale of land, 400 cost, gain on sale of 300. What's it going to be? Yeah? And purchase of land is going to be? Okay? Okay. So as I said, just go for those easy marks that will be there. And then obviously, you can't do the whole thing. Don't panic. You won't fail. There are lots of basic marks there.